Hello, everybody. Welcome to Tuesday. I hope everybody had a great three-day weekend. The market has come back really strong today. The S&P 500 was up 0.8%, and it was really led by some of the pieces that we have in our portfolio. If I look at all of our accounts together, we have about 67% in stock, and the rest is in bond across the board. Yet our accounts were up 1.7% today, according to my ThinkPipes charts here. And so we did better than twice the rate of return of the S&P 500, even though we don't have full exposure to the stock market. And that is because clean energy did really well and really took off today, as well as some of the other pieces that we have with the innovative technology and even the genomics. So if you take a look at what's happened so far this year, the first week of this year was probably the best week I have seen in the 35 years that I've been managing money, at least for portfolios that I'm managing. And then last week, we took some of that back. I said that was possible. I felt like that was sort of a healthy thing. Today, we made back everything that we lost last week, at least in total. Every account's going to be a little different and depends on what happened, but in total. So I'm very happy with that. And things are playing out kind of the way that I would expect. We're in an upward market. And when we get these downturns like we had, especially on Friday, we get this pullback that happens. And, eventually that creates buying and everybody comes running in. Talk a little bit about what happened last week. Most of that downturn came after Biden announced the stimulus plan that he wants to do, the $1.9 trillion. And so there's an outlook on Wall Street that, we get too much stimulus, we're going to get inflation, and then the Federal Reserve has to start raising rates. And if you recall from some of my previous, posts, when they start raising rates, that's when the market has more, trouble historically. And so I will say that we've been talking about the possibility of high inflation going all the way back to the 2008 downturn. It was the same concern when they put out the different stimulus at that time to kind of save the economy and get things rolling. We, ended up with a 12-year, stock market run that, ended with the pandemic downturn in February. And so we have not had inflation, and that's what they're concerned about again. It's very possible. Certainly, when you do these stimulus things, there's lots of money that gets printed. There's a possibility of, the erosion of the dollar. Treasuries can sometimes, go down in price, which makes the, yield go up, which then makes them more attractive, et cetera. So very legitimate concerns. It just has not happened at all, in a really long time, actually. We haven't had significant inflation for a while. So it'd be interesting to see how that plays out. But at the moment, things are doing quite well. And to a certain degree, you're not going to have inflation if they are filling holes in the economy, because, that's what these stimuluses are about, is just if they overdo it, that's what people are worried about. So just so you kind of know what's happening out there. I'm not too concerned about that, just from the standpoint that, predictions are mostly wrong. So I try to, do a reaction to what happens. And, right now we got to react to the fact that the stock market is going up, and it's very strong. And that the key driver, for our portfolios is really clean energy. Genomics is doing well. Innovative technology is doing well. Those are areas that are continuing to attract dollars for obvious reasons. I mean, these companies have the potential to do well, or they're doing spectacular right now, depending on the situation. So look forward to seeing what's going to happen this week. Hopefully things continue to roll, and we see some good gains here too. So I will talk to you tomorrow. Thank you.